Okay, welcome everybody to today's live stream. Just waiting for everybody to tune in. On today's live stream, we're going to be going over this new report that exposes exactly what's happening with Bidenomics, how the economy is not booming like he's saying, how the unemployment rate is not really as low as low as they're saying it is. The consumers are struggling. People are maxing out their credit cards. Inflation is destroying the middle class and the poor. The housing market is facing big issues. And we also got some other data that goes against the GDP that they're putting out that shows that the US economy actually is in a recession. So we've got a lot to cover. This is going to be a very important live stream. Again, just waiting for everybody to tune in. Go ahead and chat amongst yourselves in the live chat, build that community. You can go ahead and connect with one another as well. It's really great, and that's why I love doing these live streams. But again, what we're going to go over is the Bidenomics con. What's really happening out there in the economy. And we've got some new data, some new facts and information to back this up on what's really happening. So okay, waiting for everybody to tune in. Okay, without further ado, everyone, you know what time it is. Let's get straight into the news, the facts, and the data. So look at this. Proof that Bidenomics has been a catastrophic failure. So go ahead and type 1 in the chat, everyone, if you think Bidenomics is working, or type 2 if you don't think it's working. So 1, if you think Bidenomics is working and the economy is doing great like they're saying, or type 2 if you think the economy isn't doing great. If you're seeing lots of pain there. Okay, I'm seeing lots of 2s out there. So pretty biased there. Yeah, everyone's typing 2. So I think everybody knows how bad the economy really is. So you're right, everyone. We've got information here, the charts and the data to back it up. So let's get into it. So they go here, Joe Biden can't quit fibbing. And isn't that the truth, everyone? On Labor Day, he traveled to Philadelphia where he delivered a speech touting the success of Bidenomics. I don't know about you, but I think the economy is doing much worse since Biden took office. So who does he think he's fooling? The American people aren't buying that nonsense. And from what I can see in the chat here, you guys aren't buying it. They know the prices are out of control at the grocery store. So again, type 1 if you think inflation's over, or type 2 if you're still seeing lots of price hikes at the grocery store. So 1, if you think inflation's over, he's conquered inflation, the central bank's conquered inflation, or type 2 if you're still seeing lots of price hikes at the grocery store. Okay, so again, everyone's still seeing those price hikes, and I definitely am. I went to the grocery store the other day, and a dozen of eggs was over $7, which is completely ridiculous. Okay, and so they know, that the cost of living has been rising much faster than their paychecks have been. Exactly right, the data proves that. Real wages are falling, meaning that, for example, if wages go up 3%, but inflation is 5%, then that means people are really losing 2% of their purchasing power. They also know that high interest rates have made it much harder to buy a home. That's exactly right. But we'll go over in a moment that this crazy housing market we've been seeing, it can't hold on much longer. And really what's going to be the trigger that ignites the housing market downturn will be the unemployment rate ticking up. So they can see that lots of people are starting to lose their jobs. That's exactly right. We're seeing even the official unemployment rate is starting to tick up, but the real unemployment rate is double that. The truth is that Joe Biden's time in the White House has been an economic nightmare. So again, type 1 if you think he's been doing great at the White House, or type 2 if you agree it's been an economic nightmare. Type that in the chat. Okay. So it appears that conditions are likely to get even worse. Okay. So what else have we got here? Look at this. We've got some good surveys and some good information here. So according to a Wall Street Journal poll that was just released, 59% of US voters do not approve of how Biden is handling the economy, and voters are particularly concerned about where inflation is headed. And I completely agree. I think it's quite obvious that you all agree as well. Now, also, voters overwhelmingly think Biden is 80 years old and he's too old to run for re-election, and only 39% of voters had favorable view of the president. So, I don't know what's going on here, everyone. I thought he was the most famous president in US history. 81 million votes. Okay, so, but that's not all, everyone. So, Senate Republican leadership released a report in July showing that inflation had soared by 16.6% since Biden took office. Groceries prices have increased by 20%, the report said, citing the Bureau of Labor Statistics data, while energy prices have increased, listen to this, 38%. Now, this is the official CPI numbers. Now, when we look at shadow stats, when you record inflation the way they used to do it in the 1980s, it is at least double this. Okay, but also some great information here. As a result, over 60% of Americans are living paycheck to paycheck at this point, and the debt levels are rising to unprecedented levels. So that's exactly right, everyone. We're seeing all the information here. Credit card debt just increased to $1 trillion. We're seeing credit card delinquencies and auto loan delinquencies are at 10-year highs. And also we're seeing people's savings is dwindling. So unlike, Biden says, or even the Wall Street analysts say, or people in the mainstream media, I keep on hearing this thing saying the consumer's balance sheet is strong. Well, that couldn't be further from the truth. Okay. Now, this is because consumers have so little disposable income these days, and retailers all over the nation are experiencing difficulty. So we've got some very good information here from retailers, and like I've talked about in my other videos, we're going to see massive store closures. So listen to this. So UBS is projecting that 50,000 stores could close in the United States. So go ahead and type 1 if you're seeing store closures in your area, or type 2 if you're not seeing any store closures. So type 1 if you're seeing more stores closing down, or 2 if you're not seeing any. But again, with the theft that's going on right now, we're going to see much more store closures. But they project store closures could accelerate to 70,000 to 90,000 if retail sales turn out to be weaker than expected, according to UBS. And we definitely are seeing that. And we're seeing their profit margins are being destroyed by shrink, which is a nice word for theft. Now, also, what's happened to the housing market? The housing market has gone absolutely berserk. House prices have become so unaffordable for the average American. And now with interest rates at record highs, this is literally the worst time to buy a house right now. Now remember, the US housing market, same with the Australian housing market, Canadian housing market, it's not just one market. There will be parts of the country which will be doing well, and there'll be parts of the country which will be doing poorly. But right now, I would not buy a house. They're still close to record highs of prices. It's only a matter of time before they come down. And again, it's going to be that unemployment rate ticking up, which will get that down, and we need more inventory. But look at this. On Monday, the average 30-year fixed rate mortgage reached 7.48%. So not only are you paying crazy prices, but you're paying crazy interest, marking the highest levels since the year 2000. That's right, the highest interest rate in 23 years. So there's simply just a matter of time. The housing market does not make sense at these prices. And if you're an investor, you're losing money by buying a house, even renting it out. You'll have negative equity and negative cash flow. So even prior to this recent surge in mortgage rates, housing affordability, as monitored by the Atlanta Fed, had already deteriorated beyond the levels seen at the housing bubble peak in 2006. So again, everyone, housing affordability is now worse than it was in 2006 before the great 2008 housing market crash. Now, people's credit scores are a lot better this time, but simply when you do the math, it doesn't make sense. We are going to have to see a big correction in the housing market, and we are seeing this already in a lot of places in California. So once this latest mortgage rate surge is factored in, August 2023 will become the worst month for housing affordability this century. So that's right, everyone. This is the worst housing affordability in a century. So what do you think is going to happen next? We just simply can't sustain these price levels. It is absolutely ridiculous. So house prices are starting to come down a little bit though. So homeowners are sitting on negative equity time bomb after losing $108.4 billion on their property values this year. So the average borrower saw their home equity plummet by $5,400 in the first quarter of 2023 compared with last year. Now again, with households in Washington, California, and Utah worse affected. But like I said, what's going to really trigger this housing downturn is unemployment. So now large companies all over America are laying off workers, and it's being reported that a staggering 1.2 million native-born Americans lost their jobs during the months of July and August. And the reason for that is because there's record immigration right now, and this is taking Americans' jobs, but it's also keeping wages suppressed. That's why they love immigration, because it floods more and more labor, cheap labor, into the market. That makes everything more expensive, but they can pay less. So staggering figures released that over 1.2 million US-born workers lost their jobs, while foreign-born workforce increased by nearly 700,000. So as migrants continue to flood across the border under the Biden administration, and we've all seen the videos of the borders. The border's completely overrun. People are just coming in like crazy, and I think it's only going to get worse. So, listen to this. For Biden, one of the biggest challenges is his age. The Wall Street Journal poll found that about 73% of voters think Biden is too old to run for president, while only 47% think Trump is too old. So 36% of voters think that Biden is mentally up for the job. I don't know how you can believe that. Is, he's all over the place when he's up on stage there, walking around, running after ice cream trucks and chasing after dead people. So we've never seen numbers like this for any president. But I'm going to show you now another report that backs up this information, that the economy is really deteriorating, and we are actually in a recession now. So I'll go ahead and bring this up. Look at this. Mainstream media finally wakes up to the gap between GDP, that's gross domestic product, that's how they normally measure the economy, and GDI. This is a huge recession discrepancy. So the difference is GDP, gross domestic product, GDI is gross domestic income. Now, they've been revising GDP lower after they put out this amazing GDP number, and then quietly 3 months later, they'll revise that lower. But the GDI, which is income, is painting a very different picture. So listen to this. The difference between GDP and GDI is the biggest in US history. It should be identical, but it isn't. And this is how we know we're in a recession now, everybody. So GDI was negative for 2 consecutive quarters and has been weaker than GDP for 4 quarters. GDI is now positive, but is subject to greater revisions than GDP. So that's right. When we look back at history, we can see here, since 1973, GDI has done a much better job. 4 times it signaled recession before GDP, and once it caught a recession that GDP missed. Twice the two triggered at the same time, and once GDP gave a false alarm. So this is a much more reliable indicator, everyone, of the economy, and we've got more news to back that up. So look at this. I'll go ahead and adjust my screen here. So this is out today. Mortgage demand drops to 27-year low as interest rates slightly pull back, but I think they're still going to go higher. So the average contract for interest rate for a 30-year fixed rate mortgage with conforming loan balances, $726,000 or less, decreased to 7.2% from 7.3%. But again, this is still 20-year high interest rates. So applications for a mortgage to purchase a home fell 2% for the week and were 28% lower than the same week 1 year ago. Now, if you think consumers were doing tough with the rising cost of living, everything getting more expensive, well, now the credit card companies are, come after you, and they want to take their piece of the pie as well. So look at this. Visa and MasterCard plan to add new card feeds in the coming months. So again, people are paying 20, 25% interest on their credit cards. They're in mountains of debt. Everything's going up. Well, guess what? Visa and MasterCard are about to increase their fees as well. So everyone, I know we think, okay, what does all this economic jargon mean for you in simple terms? What this simply means is, everyone, unlike Biden is saying the economy is not strong, it's not doing great, we've got all the facts, the information here to back it up. The economy is deteriorating, that GDI, gross domestic product, is falling, the housing market is in a recession. It's only a matter of time before house prices start falling. And again, it's going to be that unemployment rate ticking up, which will really bring, the pain for the average middle class and the poor. So everyone, I hope you enjoyed this live stream. Thanks for watching. Go ahead and chat amongst yourselves in the live chat, and I'll see you all in the next video.